Homeowners insurance rates have been rising for the past couple of years. So if you're a homeowner or you are getting ready to purchase a home, you're going to want to watch this because you need to understand why it's happening, what your options are. And I'm also going to talk about some of the consequences that you may have to go through if you don't act fast enough. Year over year, insurance premiums have gone up 13%. Actually, our insurance just renewed today. Actually, we paid, I want to say, roughly $1,690. And when we renewed, we wound up paying like just over $1,900. So the increase was like 15%. But we're probably going to see our insurance premium rise again next year between another 7 to 9%. And that's not just us. That's for everybody out there who has homeowners insurance. Now, why is this happening? Typically, insurance premiums go up roughly between 3 and 5% every single year. That's just due to the cost of doing business and inflation, which we're currently sitting at about 4%. So no wonder. But there are some things that we've seen over the past couple of years that we typically have not had to experience. One, home values shot up tremendously, in some places as much as 40 to 50%. That was really due to the pandemic, the lack of supply, and the increased demand. The other thing that we saw due to inflation was building costs. So the cost of lumber increased drastically when we were going through supply chain issues. And then we've seen a lot of natural disasters and fires that have happened. So natural disasters in places like Florida and Louisiana and even Texas. And then here in California, we've been dealing with wildfires, and it's gone so rampant that a lot of companies have decided to exit the business. So for instance, here in California, AIG and State Farm was probably one of the largest, if not the largest insurance provider we had for homeowners. They totally left the business altogether. Now, it's not that they dropped their current customers, they just aren't starting any new policies. But this isn't the case for every insurance company that's out there. Some of them are actually dropping their current policyholders altogether. Now, why are they doing this? Because when natural disasters or fires happen, what do homeowners do? They issue claims to cover the damages and the losses. Remember, I told you that we've seen a rampant increase in wildfires and natural disasters that have happened in all of these places. And so if the cost of a home has increased and the cost of building has increased, that means the insurer is actually paying out more to essentially rebuild the same type of house. But you're using supplies, lumber, everything else, and even the amount of wages that have increased for contract workers and laborers, all those costs have increased. And that has eaten into the profit margins of a lot of these companies. And they've essentially said, we're tapping out, no mas. And that's leaving a lot of customers right now wondering, is my insurance company gonna raise my rates? If so, by how much? Or are they gonna drop me altogether? Now, these are important if you already own a home, but if you're looking to shop for a home, you need to know exactly who you should call for an insurance quote. Now, if you're currently a homeowner and your insurance company is not going to renew your policy, or you're looking to change policies, it's important that you do all of this research before your renewal date. Now, why is this important? Simply put, if you have outstanding claims for your insurance, like let's say you filed a claim for a roof leak or a fire or something like that, and that hasn't been resolved before your renewal date, when you go to shop or your insurance company is getting ready to drop you, when you go to apply or seek a new insurer to cover your home, they're going to see that you had claims out that have not been met yet. And because they have not been met, there's probably still some damage. Most insurers are not going to insure you. However, there are some workarounds to this. There are certain state-covered insurance programs. I think Citizens Insurance in Florida is one of them. I can't remember the one that we have in California, but each state, I think, has its own insurance company or insurer that you can go to in the case that you can't find coverage from somebody else. Now, you're gonna wanna check with your state to see what that looks like, because I don't know, like I'm here in California, but I can guarantee you this, whatever it is, it's probably not gonna be as great. And there's probably going to be a ton of people who are on it right now, which means that at some point, those premiums are probably going to go up even faster. So this is a really important detail for you to know. If your insurance company is going to drop you, you're gonna need to pick up insurance really, really fast, depending on when your renewal date is. Why is that important? Because if you have a loan on your home, you're required to have insurance. If you have a lapse in coverage, depending on your loan agreement, your lender can do a couple of things. They may issue a notice of default because per your agreement, you're supposed to have homeowners insurance. And when you don't, that means you not met all the terms of the agreement, which means they can actually push a default through. The other thing the lender can do is force something called place insurance. Place insurance is simply just the lender goes out, they find an insurer, they pay for it, and then they tack that fee onto your monthly mortgage. Now, they're going to just go out and find somebody, and whatever the cost is, they're going to get it, and you're going to pay for it. So it's typically a lot higher than what you would find on the open market. And there's another piece of this that you're probably not going to like. When they purchase this place insurance, it does not cover your liability or your personal property. It only covers the collateral. In this case, the lender is concerned about the house, and that's the only thing it covers. So if something happens, God forbid, there's a fire in your home, a wildfire, a flood, some kind of hurricane or tornado, earthquake, I don't know, whatever the case may be, the structure itself will be covered. Anything on the inside that you personally own will not be covered. Anybody that comes into your house that suffers some type of injury, the liability for that will not be covered by your insurance. So you are going to have to come out of the pocket to pay for that. Now, this is all interesting because I'm making this video on the day that my insurance renews, and then my dad calls me from Florida and tells me that his insurance company is going to drop him because of the number of claims that he's placed on the property. Well, he's been through several hurricanes, and he's had to fight the insurance company about what is considered a natural disaster, what's considered wind damage. That's a whole story in and of itself. Bottom line though is they're going to drop him, and his renewal date is approaching. Yet he has roof damage that he claimed, I think it was earlier last year, that has not been resolved yet. Well, if they drop him and that hasn't been resolved yet, it's going to be hard for him to get another insurance company to take on a policy. So he's probably going to have to go to, in Florida, he's probably going to have to go to Citizens. Well, with that being said, Citizens will offer you a policy, but it has to be within plus or minus 20% of what you could get on the open market, which means he could be paying more for insurance than he currently would be right now. This is why it's really important that you pay particular attention to this stuff, especially for those of you who already have homeowners insurance. And if you're getting ready to get homeowners insurance because you are going to buy a home, you're going to want to pick the right company. Now, again, if you're buying a home, during escrow, at least here in California, they ask you who is your insurance company. So you have to get that information done up front before you can even close on the loan. Again, that's why it's really important that you do your homework and all your due diligence first and foremost, whether you're on the homeowner side or whether you're becoming a homeowner. So I hope you guys found this information useful. Just keep it in the back of your mind. If it's not useful to you right now, if you are a homeowner or going to be a homeowner at some point, it will be. If you're a renter, chances are your landlord is going to see an increase in their insurance premium. And as a landlord, those insurance premiums can go up as much as 50%. Now, wherever you are, I don't know how rent works. Here we have rent control, so the owners can't just pass that cost on to the renter. But I can guarantee you they're gonna try to find some kind of way to do it. So again, I hope this helps. Let me know what you think. Leave your comments below. If this has affected you, definitely leave your comments in the section below, because I want to hear some of your stories. And if you were able to figure out some solution to those stories, wherever you're at, please leave in the comments and let me know.